your time.
So welcome everybody to what is the traditional now year-end review from our chairman, Andrew Weir. And I'm delighted he's joining us today and to give his views. We're sitting here in December 2023 of what's been a very challenging year for most sectors in the world, and in particular in Asia. Since the reopening, we have to remind ourselves that the reopening in particular places like Hong Kong only happened in February. But it feels like such a long time ago, but actually it's still less than 1 year ago that, you know, all the restrictions were lifted on what is now that people want to try and forget as quickly as possible was the pandemic. So welcome, Chairman Andrew, to this end of year review, which I always look forward to hearing your views. So many things to talk about, but to try and, I guess, keep it on point, I'd love to start a question about, you know, last year we were talking about this nearshoring, the China plus one plus multiple strategy, where companies were moving some of their capacity to multiple other locations, which make it much more challenging. But still, in retrospect, has a lot really changed the fundamentals? Like, we're very much still talking about interconnectedness of all the different economies. You know, there's this saying when you know, China has a cold, catches a cold, we all get flu. In the rest of the world, we have a pretty bad time these days because they have such a sizable proportion of trade. So, I mean, I'd love to get your views. You obviously, where you sit with KPMG on the global board, as well as wearing a hat in the non-independent executive directors as well. So let's kick it off with just your thoughts initially of like where we are, you know, come December 2023, your reflections initially for this year.
Oh, well, thanks, Mike, and great to do this. I do enjoy this year-end tradition, and thank you, Mike, for everything you do for PBEC, and thank you everybody for dialing in. Just, you know, when one takes a step back, you're absolutely right, Mike. It is easy to forget where we all were a year ago. Much of the Western world had moved on from COVID. A lot of us in the Pacific Basin were nearing the end of COVID, but hadn't fully emerged. And places like Hong Kong and China were still pretty much in the middle of it this time last year. And only at the beginning of January and then finally in March did restrictions really get lifted. And I think with my own organization, and probably many of the same, it was how to ride the post-COVID recovery, Mike. And I think we are all going gangbusters in the post-COVID recovery. And then really towards maybe middle of the second quarter, a large dose of reality hit in terms of market demand, the global economy, and in particular, the slowdown in China and the difficulty of China addressing that slowdown. So it's been a really volatile year, part major recovery, shortage of resources, and then the latter part of the year being a real challenge on growth and profitability for many organizations. I think what's interesting is, Mike, when I grew up, the expression was when America sneezes, the rest of the world catches a cold. So your analogy with China shows how things have changed. But maybe I could just share some reflections. PBEC is an organization which is the voice of trade. Never before has it been so important that those of us who believe in international connectivity and trade speak up. Yes, the world has become more national. It has become more domestic agenda oriented by necessity. When citizens of countries are suffering under a pandemic, obviously the government has to double down and look after its citizens. But notwithstanding that, the same trends of basically globalization are still in place, but are happening in a different way. So the trade patterns are largely similar, but are happening in a slightly different way. And I think what that means is, yes, we have a new version of globalization. It is more fragmented than before. It's less seamless. It's moving from just-in-time logistics to just-in-case logistics, which means there needs to be plenty of risk management, cushions, and alternatives in supply chain. But the overall patterns of trade remain very solid. But within that, you've also got, Mike, in this new globalization, increase what I call regional trade, regionalization, where Asia Pacific, Europe, and America in some ways are diverging more than before. A great example would be ESG. But the other thing you're seeing on this is the fragmentation is giving rise to bilateral arrangements and corridors. And one of the biggest examples, which I'm very heavily involved in actually, is the reset or maybe pivot of both China and the Middle East towards each other. This is a two-way flow. It's not really recognized or understood that a quarter of China's trade flows through UAE ports. And that traditional role of Middle East as a trading hub, as a logistics hub, now as a finance hub on the back of the diversification of oil revenues, I think this is a real major trend. And indeed, the China government, mainland China, has been pushing very heavily for MOUs, trade accords, and others with Saudi, UAE, and other countries in the Middle East, and indeed in Hong Kong. We're just about to sign a number of MOUs on financial services, trade, logistics, and even digital. So a very fair question is that a historic shift, or is it a window of opportunity? I don't think it really matters. It is definitely a trend for the next couple of years. The other big trend, of course, is within Asia. I think you're seeing a lot more China into ASEAN. And then ASEAN, how it plays itself vis-a-vis China and vis-a-vis US, and how it does that balancing act. And to be quite frank, the most important thing is no one ever asks them exactly what side of the fence they're on. So I think there's a lot of things going on, Mike, but the point I want to make is I think trade's still vibrant. It's stickier than before. There's more restrictions than before, but a large dose of cold reality is now facing. I was in the US recently chairing our asset management and real estate and private equity conference with loads of clients. Very, very interesting. Yes, people are talking about the fact that China relationship is a very politically charged one, and that America's becoming more domestic, and that talking about how Mexico has overtaken China as a major trading partner. What they didn't say is who is the major new investor into Mexico. It's China, investing in plants and supply chains in order to serve the US market. And I think the Xi Biden discussions and the slight thawing you're seeing shows that it's in everybody's interest to find a way, actually, that, yes, it's not decoupling in any way at all. It is de-risking, but then everybody has to work with everybody in order for trade flow still exists for the national interest of the countries concerned. And that, I think that gives quite a positive way as we move into next year.
And Andrew, I mean, I love what you've just touched upon there, because you mentioned Mexico, and you could argue for the last sort of 5 years in an ever increasing annual way. Similarly, you know, the diversification of supply chains from mainland China into places like Vietnam in particular, which has been a big winner, is also driven predominantly by Chinese investors.
Well, it's a great
serve
point.
The American market as well.
I mean, this China plus one strategy,
Yeah.
everybody started to think this was multinationals, how they look at China, Mike. You know, our big client base, many of them are deploying into particularly Vietnam. Cambodia is a big destination. Indonesia is very in vogue at the moment. And of course, Malaysia, as part of a de-risking, excuse me, by Chinese companies.
Yeah.
And also it's a way to align with tariffs and align with the geopolitics in a way which doesn't undermine the national priorities of obviously China or the US. So there's a lot of what I call very clever behavior, very clever, very agile supply chain and business decisions being made in order basically to keep the chains of trade moving.
Now, it's interesting then that, you know, we've heard over the last sort of 2 years in particular under Biden's administration, the introduction of the Indo-Pacific Economic Framework Supply Chain Agreement, which actually came out on the sidelines of APEC in San Francisco last month. A further update on a couple of the chapters were agreed amongst those signatories. And that's sort of, it's in terms of foreign policy for the US, it's sort of seen as a rebuilding of US manufacturing to align with US international economic policy. But there are still question marks over its true influence and effectiveness. And I was just wondering if you have any comment on that, just from where you sit, because obviously they pulled out of the original CPTPP, and they've never really been part of RCEP, because that's seen as a more, not entry level, but sort of a very industrial type of a trade agreement, not necessarily encompassing yet, the digital side, which many actors want to see. And I think that's where perhaps the CPTPP is further ahead with Singapore's influence. But I'm just wondering, do you see the merit in IPEF over the next couple of years? Do you see that going to encroach on what is already existing?
I mean, it's clearly geopolitics. It's setting up as some form of counterbalance,
correct,
to RCEP and others. I do see increasing emphasis, particularly with regard to India and obviously Japan and South Korea, countries like this. But I haven't seen what I call major shifts in terms of trade and investment yet, Mike.
Yeah.
But I think with all these things, these are thematic, these are trends, and it is a change of emphasis, and over time that will come through. And I think one of the biggest drivers we're going to see in our world, Mike, is RCEP. And I think the impact of RCEP long term is going to be absolutely massive. And I think when you look at RCEP and maybe you look at Belt and Road, and if you see Belt and Road as less about infrastructure, but more about economic connectivity, economic alliances, basically trade, a combination of RCEP and Belt and Road, I think is going to be a very strong long-term influence on the region where we live in. I think the Indo-Pacific one is more of a political counterbalance, and it'd be very interesting to see whether some form of trade concessions or some form of investment flows come on the back of that. But at the moment, I think it's fair to say we haven't seen too much yet. Would you have the same view?
Yeah, I mean, I think at the moment, it doesn't really give any incentives for those who are looking for more access to the US market itself. US hasn't come to the table with those sweeteners, as it were, at this moment in time, but they are looking to influence, obviously, standards of what exports or imports are coming through their ports and shores. And I think that's where they are sort of overlaying in some ways what exists today, and maybe help speed up some of the increased standards that are required, whether it's around labor rights, etc. So I think it's something to keep a monitor on. But yeah, I agree with you. There's not necessarily enough oomph there to sort of put the fear into any of the existing trade agreements or any of those that are under negotiation. I just wanted to move on a little bit about, you mentioned there India, and it's interesting, speaking to some of our PBEC senior colleagues in places like Indonesia, Singapore, Philippines, Malaysia, India is now top of mind, not necessarily with an immediate requirement to invest, but they want to understand India from where they sit. I mean, most of these guys dominate or are very much fully experienced in dealing with mainland China for many years and the region in general. But when it comes to India, yourself, Andrew, it's a difficult place sometimes. When you move below what we say, the listed, well-known firms like Reliance, Tata, etc., what is the next sort of tier of companies and how do you deal with them? Because a lot of them are family businesses. They're not so transparent on their financials. Any advice for some of our members of how you deal with the opportunities that are coming in India?
Well, it's interesting. It's very similar to advice I'd give with regard to Middle East, UAE in particular, and to an extent Saudi, which is now is the time to double down on contacts, double down on building up market intelligence, and basically have a constant ongoing qualification, Mike, of the market. I do a lot in the real estate and logistics sector, and when capital's being deployed in Asia, because China has some challenges at the moment, there's a lot of people sitting on the sidelines. They are tending to have a very close look at India. And what I found on our client base is There's a lot of science parks and tech parks and economic zones with government support in places like Pune and others, where there's a facilitation of international investment. And I think that more sort of managed way of entering the market with high-end partners or through these industrial parks, industrial zones, or business parks is probably the way to go. It is very difficult, I suspect, to become a major investor in, let's say, a family group in India, where obviously the family wants to control. And as you said, there's a handful of very, very strong listed companies. So I think the message is have it on the radar, qualify it step by step, you know, go where the environment, the local and regional state environments are very different. Go where the environment is supportive of overseas investment.
And I would just add to that, maybe, you know, if there's sufficient interest and we get a critical mass, we could look at even having a PBEC delegation go to one of the major cities and look at introducing alongside the KPMG advisory services that are so strong in India.
Go to Hyderabad or Pune, I think makes a lot of sense. But so India it's like China, it's a massive market. It's too broad to speak at India. You've got to speak about the city, the state, really.
Yeah. And then sticking with the private sector, you know, you talked at the very beginning about, you know, governments have an obligation to help, you know, those who are struggling through what was, you know, a prolonged pandemic. But, you know, businesses now play an even more important role than ever before. I feel like, you know, never when I was growing up did businesses need to really think about their surrounding communities like they do today. And I guess it comes under a bit of the S and even part of the G in ESG, but, you know, businesses can help connect communities, correct? Right. I mean, that's some of the stuff that you guys advise your own clients of, where you can position yourselves to be, whether it's a top employer, doing the right thing in terms of engagement with the youth around your location, and putting out, you know, leading, if you like, in some of these exchanges voluntarily rather than waiting to be mandated to change. Where do you see the sort of private sector? Because, you know, this year has been tough, right? Raising money has been really tough in the second half. There's not so much appetite for climate-related financing, other than outside, you know, other than the green bond issuing. But, you know, that doesn't necessarily feed into the wider economy. So I'd just love to get your thoughts on, where do you see the private sector right now playing a role? And do you feel they'll get back into it in 2024? Or are they going to sit on the sidelines along a bit more?
Very fair question, Mike. I mean, my take is a couple of massive trends were already starting, and COVID acted as a massive catalyst. What are those trends? I think that first trend is, what is the purpose of an organization? What is the purpose of your company and firm? I think before COVID, this was seen as business school speak and lobby speak. But I think it's become apparent by the way the community reacted during COVID, staff react during COVID. You've got to have a real sense of social purpose and have a social license to operate. This is very different to before. The other big trend, two trends which came out during COVID, is ESG has gone from being, again, nice to have into we have to do it, but how do we do it? And the third one is digital and transformation, use of cloud, data security, etc. Again, before COVID, you could choose whether you did it. Now it's mandatory. Those three trends, I think, are historic in nature. But just going to your point, there's a tendency to believe that ESG was invented outside the region. I've always been amazed by the family office model in Asia, where years before ESG was called as a topic, a lot of family offices were doing the right thing by the community. They weren't in any way communicating it, maybe. They weren't promoting it. But there's many examples in all of the countries in PBEC of private, high net worth individuals, families, owning companies and putting back into society. So to answer your question, I think the answer is, what is the DNA and purpose of your organization? I think that's absolutely key. Now, on that, I think I don't think there has been a slowdown. I think in Asia Pacific, it's a measured approach. You only get a real jump start, Mike, in ESG when regulations come in. And it's interesting, Hong Kong has regulations coming in. And you only get a jump start when you start to get boards realizing that maybe their share price, maybe the availability of finance, maybe a cost of finance will be impacted. And that's starting to come through. So I'm not quite as concerned as you, Mike, about not having been a great year on ESG and climate. In all of our client base, I can tell you, ESG is a boardroom level issue now.
That's good to hear. I think that's good to hear. I mean, obviously, I agree with you. I mean, Asia has been a pretty strong philanthropistic region in most of the major cities, countries. In Japan, Korea, Hong Kong, Singapore, Australia, even. They've got a history of giving a lot of money away. And I mean, as you know, we used to call it the autumn of charity balls, right? In Hong Kong, it's like one after the other. So there is that, but I do think now, quite rightly, that if Asia doesn't have the structure or discipline given to it, then they'll continue what they think they need to do, but not necessarily putting it enough attention on the right areas to develop. So I do feel those guardrails are required by regulation, and the sooner they come in, and I hope with consensus, businesses actually buying into what needs to be mandated, because sometimes a lack of consensus and just arbitrarily bringing out new regulation is not healthy either.
But Michael, what I've seen is a real shift. A couple of themes maybe I could point out. A real recognition at boards that this is not just a year-end form-filling exercise to satisfy the stock exchange. I think that was the way it was heading. Now there's recognition. It has to be embedded into risk assessments. It has to be embedded into the strategy. And next really big trend is recognition that climate is a standalone issue. I think if we were rewriting the history book, we would have climate as totally separate from ESG. It is such a massive issue. And Mark Carney and people at the task force driving this, I'm sure, will not rest until climate risk is defined the same as finance risk. When it's defined the same as finance risk, then you couple that with the new sustainability standards, Mike, reporting, you're going to see a massive sea change in consideration of climate. And the impact on carrying value of assets, taking into account climate risk and the availability of finance. And I think the next two trends, governance is something which has improved massively in Asia Pacific. Governance is something boards can control, and linked to that is diversity. And I think what's driving it is recognition now that business scrutiny is huge. We did a KPMG survey, Mike, globally, and it was quite astounding. 2/3 of individuals would either, or staff, would either not buy from an organization or not work any longer for an organization if that organization's stance on political and environmental issues did not align with their own personal stance. This is very different from the world we grew up in, Mike, where you find an organization you believe in and you align your values to them. This is the other way around. And this level of business scrutiny and demand of younger people for responsibility and accountability on ESG, political, social stances is a massive challenge. And then I think the last point I'd just say is the S part. You raised that very, very well. I think actually the social part of ESG needs a lot of work. The key is to come out with how we're going to measure ourselves, what we're going to commit to. And I think an interesting area which Asia Pacific may wish to do, and maybe PBEC may wish to do it, Mike, is a number of my sort of senior client contacts have been saying, hey, Andrew, we have carbon credits and offset where we can't quite get to net zero because of the way we run our business, but we want to buy offsets. Surely there should be social offsets. Surely there should be organizations where you can buy social credits from in order to discharge our social responsibility through experts. So, Mike, I am positive about this, and I think one's got to realize this: the scale of a transition of the world economy and companies on ESG is akin to an industrial revolution. It is that big. I think it's 145 trillion US dollars is the overall cost of transition.
Well, I have to say,
Facing up to this is incredible.
We heard it first here, social offsets. I'm really resonating with that. I think that's a huge opportunity right there for, especially for NGOs to get closer to the business sector in helping achieve this, even academics. So it's that whole sort of what we say, the tripod or wheelhouse of those organizations where business, NGOs, academia come together to come up with recommendations, right, for government policy. Similarly, this could be around how do we come up with recommendations that could be recognized for social offsets. So I really love that idea. I think there's a lot to be looked into on that. So you heard it first here, guys. Andrew Weir, social offsets. But I now want to just dive a little bit deeper into a per sector, because we can't carry on without talking about China's success in the electric vehicle and EV battery space. It's been phenomenal in terms of where they took a long-term view more than 5-6 years ago, and the domestic purchasing of electric vehicles, I think, peaked even higher in the third quarter this year than pre-COVID. So, but yet the GDP forecast, it's still predicted to be over 5% by the end of this year for China, yet US is just over 1%. Why do you feel the Western media are so hard on China's economic performance, saying it's down and out? It's the beginning of the end.
I mean, it's certainly not down and out. And this is an element of, again, massive transition in the Chinese economy. I think the reality, Mike, is the challenges of the real estate sector are still being fully addressed. And the working through, people forget, you can have some estimates are 18%, other estimates are 33%. That massive supply chain and lumpy fixed asset investment model of real estate in China, it's part of our old economy. The reset of that is taking time, and it flows through the economy. And I think that is probably very related to why there hasn't been a deliberate pressing of the stimulus button. I think the China policymakers are very, very smart people. We prove that time and time again. So I think this is for a reason, is to address a few issues. But you're right, 5% growth. I think what it is people are now recognizing, despite all the political rhetoric, there's now an impact with made in China, obviously is very important. If you're trying to scale back your dealings with China, the fact that China is so integrated into your supply chain and your own economy blows back into your own economy. And so I think this is why you're getting it, Mike. You got the left hand saying, as you're right, attacking the economic performance. And then the right hand one saying, well, hold on, global growth is down now because China's down. So I think this will turn, and I think economic self-interest will prevail, that there just needs to be much more collaboration on it. I mean, it is more sectorial now. You talk about electronic vehicles. There's other sectors doing very, very well in China. So I think the economic prerogative will be for more collaboration. If you notice, the rhetoric has toned down on both sides, I think.
No, I agree. And I mean, look, and I do think when we talk about China, we have to talk about sectorial is very important, because some sectors are out, even in addition to real estate, are not doing so well. And I would say I'd put even the luxury sector in that sphere, because of the common prosperity misunderstanding in some ways by many areas of what that actually truly means. And having had first-hand experience in talking with the likes of CPPIT, which is the international investment arm of the Chinese government, back in June of this year in Beijing, when I spoke at the APEC China Summit, they made it very clear that as long as you're on the right side of the law And it's very important to mention this. Maybe you can elaborate a little bit more on what we mean by the law, because I think it's also misinterpreted by the West sometimes by that. As long as you're on the right side of the law, there are no restrictions in terms of what the Chinese government is trying to put on companies or individuals. If they need, even for instance, a private jet, and this is one of my specific pet asks, because obviously I have a vested interest in looking at business and general aviation sector, which, you know, China was the lead in terms of fleet size up until 2019, pre-COVID. They said they've got no problem with a private entrepreneur or private business who requires such a tool to do their work over multiple jurisdictions. No problem at all. So there's no sort of qualm about we're going to be putting undue pressure or undue restrictions on those companies. But of course, the flip side to that coin is there have been some pretty high profile cases of where companies who do own private jets are not necessarily on the right side of the law, and therefore everybody gets painted with the same brush. So I just want to put it out there that sometimes the common prosperity that President Xi announced more than 4 or 5 years ago now, in I think it was the 12th five-year plan, and it continued in a 13th five-year plan, that is not, you know, trying to put down success or put down innovation. And yes, there's been some interventions, market interventions, that have been looked at pretty harshly, whether it's the education sector or even some of the high technology sectors. But they said very clearly to me in June that they were done with all of those interventions now. They're very much back on looking at, what's the word they use, is reform and looking at new growth opportunities. So that when we talk about reform, we're talking about aligning regulations that are more susceptible to the domestic and foreign trade. And I read with interest in the news just yesterday that the State Council have announced a host of measures now to smooth out the domestic trade and foreign trade. I don't have the exact details, but it sounds like they're amending some of the sticky points in terms of how foreign companies do business in China, which may be to align, as you've hinted at the very beginning, further Middle Eastern type investment that can flow into the China on the back of this. So, and DFI, you know, around oil and gas, maybe, who knows? But I wouldn't be surprised if, you know, some of these areas were raised and then they're being addressed in order to accommodate more DFI from new sources. So we're not talking about the traditional US and other Western nations or Europe where they've had sticky points, but now where there's less about geopolitical, but more about the practicalities of doing DFI and trade are being addressed in order to allow those flows to happen. So it's very interesting. And the last point I just asked you to touch upon, because of your close association with UAE in particular, is how important is the sovereign funds playing in this? And then the last bit we'll touch upon is future. So if you could touch maybe on sovereign funds and just what I've been saying there, Andrew.
Well, Mike, I think on China, just a couple of reference points. Yeah, like anywhere else, one needs to comply with the law. I don't think one needs to be unduly concerned. The key is local knowledge. The key is qualifying the market. I agree with you that the tone and direction of travel is to get more facilitative measures in. On an anecdotal basis, none of our major clients have been withdrawing from China in any way at all. Possibly some waiting to see what happens. Some sitting on the sidelines a bit because, you know, US capital going into China in certain sectors is really not encouraged these days. The indirect effect of that is being worked through. But what I would say, Mike, is even if US capital is questioning a bit, there's plenty of other capital. There's massive China domestic capital, there's massive Asian capital, and the big one, of course, is Middle East. In terms of sectors, I mean, I operate in financial services sector, asset management. I mean, for all the political rhetoric, there have been some very impressive licenses awarded to major players, ironically, largely big US players in the asset management space to operate in China. So look, I'm a very pragmatic person, an observer, been here 35 years. You observe, you watch, you act accordingly. But I wouldn't fall into the trap of some of the exaggerated reporting which has been taking place. Now, you raise a great question on sovereign funds. Very interesting. A couple of new sovereign funds have been set up. There's actually a super sovereign fund now set up in Abu Dhabi and a new one just announced in Dubai earlier this week. These sovereign funds, very, very interesting, are really the diversification of oil wealth, but they're also do link to the political direction the government is taking. And I think, Hong Kong has its own sovereign fund. Temasek, GIC, you look at those in Singapore. Increasingly, they're being, I wouldn't say tools of government, and that's going too far, but their investment patterns and flows do align with the direction of travel the country's trying to go in. And so I think you're going to see very significant sovereign wealth fund activity in Asia, a very significant sovereign wealth fund in India, and very significant sovereign wealth fund in China, particularly from the Middle East.
That's interesting. And I mean, we sometimes get accused of focusing a little bit too much on Greater China, but a couple of mentions quickly when you talk about oil revenues of recent years. One is East Malaysia and Sarawak in particular.
Yeah.
They are very active right now in looking at doing a multiple of things, whether it's new infrastructure, looking at acquiring mass wings from Malaysian Airlines to increase connectivity regionally. So it's really worth, for those investors that are listening on the call to really look around the region. It's not just, if you're not able to tackle China for whatever reason, if you've got US interests that's saying you can't, there are many other opportunities in the region.
Mike, I think it's a very important point. As PBEC members, all of the PBEC economies, I think, have massive potential. I'm a massive believer in the Pacific Basin. There's a couple of driving forces. The first driving force is the sheer structural growth story. Rising population. ASEAN is 690 million people, half of whom are under the age of 30. What a market. You look at Thailand as a market standalone, Indonesia, Philippines, Malaysia, all of them have great national employment. And I think the markets are very, very strong. So the structural population, education angle is number one. Point number two is actually as a proxy for China's economic advance, the influence in these ASEAN countries is massive. And I have a lot of clients who have, for want of a better phrase, a China strategy, which doesn't involve actually being in China. It's actually the knock-on effect of China's economic power and development in countries like Cambodia, for example. So I would say in all of this, ASEAN and the Pacific Basin has a real opportunity to be a big winner. Yes, there's risk, but chance to be a big winner on the back of these various trade flows. I think Southeast Asia is seen as now more strategically important. Yes, it is a bit of a counterbalance, but I think for those economies we just mentioned, which are part of the PBEC family, I think the opportunities are very, very significant. And my advice is that these countries and the big players in this should be reaching out for international investment and regional connectivity.
Yeah, and just we're coming to the end now very soon, Andrew. Sorry to keep taking your time up there, but it's so interesting what you're telling the audience here today. But to finish on, we talk about future of work, because I guess at the very beginning we talked about coming out of the pandemic, the lack of resources, the return to the office reluctancy in some areas, and where you sit, typically running a very large organization which is people driven first, right? It's about people, it's about services, auditing, governance. Where do you see that now? Because there's been sort of a major pushback, I would think, from CEOs pretty much across the region and globally about this sort of working from home is not necessarily worked out as well as people have thought. And then the shift to clean energy and generative AI, because we haven't touched upon it, is the hot topic, but then is it a flash in the pan, or do we have to deal with it now?
Right. On this ways of working, I would propose that the Pacific Basin region runs a much lower risk on this than the West. I'm just back from the UK. It's totally different. The offices are not busy. People are going 3 days a week. You have graduates who've never been to an office. In my world, in Pacific Basin, the offices are busy again. The sense of office in society and in the fabric of someone's life in Asia is different. It is, as you know, part work, part social. It's all about connectivity. And I think actually there's going to be an economic consequence in the West. As when the history books are written, one of the ramifications of what happened in the pandemic is this change of the ways of working in the West has given rise to economic weakness. I don't think we got that challenge in Pacific Basin. So I'm positive. The key then is to use this as a competitive advantage. Secondly, I go back to what I said earlier. If you're an organization with a sense of purpose, people come in. If you have a sense of purpose, people want to achieve what you're trying to do. They believe in it. And my worry again in the West is this sense of purpose and why you're working for an organization is getting lost in terms of a discussion just on terms and conditions and work environment. Then, of course, you throw in, and it is linked, Mike, generative AI. And the smart people see this as a massive business opportunity. If you harness this, you can get massive competitive advantage. If you don't understand it and you're passive, it can really cause economic disadvantage. And the answer to this goes back to, again, what I was saying earlier, governance. How many organizations, including you, Mike, including me, truly know how much AI is being used in our organization or in the people we deal with? And then who owns the responsibility for the strategy and risk relating to AI? How about the data, the inbuilt bias, all of these things? So maybe just a parting message, I would say, Mike, is there's so many trends happening in the world. The smart businesses are those which have them on the agenda, are always realizing the world is changing. They haven't got it fixed, but have the governance in place to make sure the right conversations and the right monitoring is taking place in order to maximize the economic advantage.
And just my closing part, because I was asked to ask this question by some of our members, in fact, so this is a member's question. Where does Andrew get his trusted news and sources of data from these days, given the amount of fake news and bots that are out there?
Well, you know, there's no substitute for talking to people. I am a bit of a news hound, but to be honest, I found the most interesting thing is when we've got PBEC, the interesting people on the PBEC board and the members, various government bodies we sit on, Mike, NGOs involved in, and just if you have intellectual curiosity and ask, you get some very interesting views, and then you start to filter through, and then you start to get almost a synthesis of what you think about things. So I think one of the great advantages of PBEC is the exchange of ideas, the exchange of information, and then one starts to form a view. And I think the philosophy I always have, Mike, is what's around the corner, what's coming next, having a view on a theme and a view. I think is very important, because I think you have to have resilience and agility. And to have those two things in business, you've got to understand the world in which you work. And there will be winners and losers in this world we're operating in now. It's so complicated. And the way to be a winner on it is to be well informed.
Well, that concludes our update for 2023. I want to thank Chairman Andrew for all of his wonderful insights as always. I think my sort of takeaway from today, or two of them, is when we talk about our upcoming report, which I hope you'll stay tuned to look out for in around beginning of Q2, we hope to have it published. We'll be having an umbrella of strategy versus compliance under Scope 3 voluntary disclosures. And from what I'm hearing from today from Chairman Andrew, I do believe businesses need to be thinking about all of this as part of their strategy, and not just waiting to be complying with whatever the government's going to come out with. and this will help your growth, help your diversity in your organization, and keep you one step ahead of everybody else. And finally, think about PBEC and other organizations that you're involved with as a potential social offset, against what you're doing. And you also have that ability to be informed and not just believe everything that is written in the press. So with that, thank you so much for your time, and Merry Christmas from everybody at PBEC. Till next time, bye-bye.
Thank you very much, Mike. Goodbye.